market cycles, it used to be the Bible.
Yeah,
Right? It used to be the Bible of the cryptocurrency industry. All you need to know is the market cycles, and you'll print money day in, day out, or market cycle in, market cycle out. Are we at the end of market cycles?
Yeah, so it's a really interesting question because I don't think anyone can definitively right now probably say no or yes to the question, because we're currently undergoing what should be either the cycle top or not. But yeah, as you said, it is pretty funny. Like, we've been obviously in this industry for a few cycles now, but every time, like, I even remember, it doesn't matter whether it was the last bottom in 2022 or last top in 2021, but you'll remember when we're at $69,000. Everyone said, we're going to 100,000. The cycles don't mean anything anymore. We've got Tesla holding it, PayPal are in it, Michael Saylor's buying $1 billion every week. And no one said it was going to crash. Like, no one said we're going to get the 80% retracement like in 2017, like in 2013.
Spot on.
And we ended up retracing a full 80% to 15,000 USD from 69,000.
We're in Miami at the bottom, weren't
we? And, I think I've done a few market updates and research reports for our clients recently where I explored, that exact kind of simulated days. It's always 371 days from the top to bottom.
Yep.
And it's always 1,064 days from the bottom to top. So it's from the FTX bottom, or from the lowest price point in November 2022 to the recent October 10th liquidation event where we were kind of near the top and did drop. That was exactly 1,064 days, which I find, a pretty good argument that we do cyclically kind of still move in cycles. But there's so much against it as well. Obviously, one thing you used to be able to follow was a number of on-chain indicators that people explore. So the pi cycle top is, probably the most popular. The MVRV score is another, the pure multiple, all these different, economic on-chain indicators that you can track through mining, through buying and selling, through long-term holders, would suggest that we haven't reached a market cycle top. And I would say the reason why I currently lean that no, we haven't seen a top is because of the actual macroeconomic conditions that affect Bitcoin now. What you have to understand is, in its infancy, where we were discussing where whales and OG people control price, is that in terms of macroeconomics, pretty much post GFC, when Bitcoin came in, we had next to no interest rates worldwide. In Australia, in America, in Japan, negative interest rates, this, that. And so it was very easy to invest, where we're in a kind of barren wasteland post GFC, everyone was wiped out, and things became very, very easy. So what that meant is stock markets kind of just trended up most of the time. And so did Bitcoin, really. If you zoom out on a log scale chart, you'll be able to see this.
I think the thing that you said at the start is so true. Like, we don't know yet, right? Like, it's literally at that seesaw point. Like, are cycles going to still continue, or is it completely different market now? And what you're going into there, Bitcoin is a different landscape now. We've got institutions, we've got ETFs. So, I mean, for me, you've got to have your wits about you. You've got to be aware that potentially, if cycles continue, we are coming towards the back end of it. However, I think
so I just wanted to say, so back then you were able to track the halving cycles and what you were initially talking about. All you had to do was follow the cycles, because that actually followed the liquidity cycles of macroeconomics.
Yeah, so they were aligned.
So they were aligned. But so what I'm saying this time is it's different, right? We've been in an entire quantitative tightening regime worldwide, where interest rates at the top in 2021 went from 0% all the way as high as 5-6%, I believe. And Bitcoin has gone from $15,000 to $120,000, mainly in a quantitative tightening regime. And, one thing that's ending come December 1st that the Fed have already announced is they're ceasing quantitative tightening, and they're going to be expanding the balance sheet again, injecting liquidity back into the economy. We're seeing rate cuts. I think there's been 2 that have occurred this year. There's another one in December. There should be more throughout 2026 if inflation can remain tame. The big thing there is obviously how poor the labor market has been. That's why they're cutting rates. But there's a number of macroeconomic factors that we at Imperial Wealth put into our analysis that probably some other businesses or companies don't, or some other analysis don't. They might just still follow the cycles. And this is where they might be caught off that the liquidity cycle and the macroeconomic cycle might extend. And so it might even be a case that, the cycle top isn't now cyclically, but it might be in January, it might be in March, or we might just keep being a secular, bull market for a couple of years. It will really depend on macroeconomics, because whilst Bitcoin used to be its kind of own market, it's now, the way I see it, as a beta to kind of the stock markets. The correlation is really high due to the marginal buyers in the market. If someone from BlackRock is holding stocks and Tesla's going down, the Nasdaq's going down, Nvidia's crashing, they're most likely going to be selling their Bitcoin as well.
Yeah, spot on. No, really well said. And look, what I'm thinking in my head right now is, like, there's so much that we cover in these episodes, and, like, even with our clients, there's only so much time people have to engage with markets, right?
Yeah.
And if you are watching this and you're kind of thinking, like, this makes so much sense, but how am I going to know when to act on it? Really, the only way you can act on it is with people like ourselves in your corner. You really need to be tuning into this information on a daily, weekly basis. You can't just expect to be, oh, I'm going to buy a bit of Bitcoin, and then when something happens, I'll know exactly what to do. Yeah, like it's that gym program that I'm always talking about. You got to be in the market, surrounded by experts. Personally, I literally rely on Mitch every single day. I tune into the reports he does every day, keep me up to date with the market. There's never a moment more than maybe 15, 20 minutes that I'm like, shit, what's going on? Because I can go straight to him, and so can our clients. So if we're talking of, let's be honest, how we're feeling now, what are we thinking in terms of the market? Can we go much higher? What are the catalyst events? What do we need to be aware of?
So once again, I guess I think it's imperative to use fundamentals alongside technical analysis. So for me, I pretty much made a rule with my clients that, if we were to break below 88K, I use a range of technical analysis to understand monthly market structure, where we're in a series of higher highs and higher lows. A number of Elliott wave counts. These are different technical analysis terms that allow me to track cycle and track price, on-chain indicators, as I said, and using this kind of analysis to invalidate our bull thesis that, we're not just going to bag hold if we see prices do drop below a certain point, because this is what happens is it drops below a certain point and people go, it's all right, it will bounce back. And that's how bear markets ensue. Tops in bull markets, no one knows the actual top. That's the whole point of a top, is if everyone knew it was the top, it's not a top. Really we don't know, but the way that I see us moving higher is the fundamental side.
Yes.
So whilst the technicals are holding for now, the reason why I believe prices will drive higher are because...
Just quickly, if you're ready to take your results to the next level, my team at Imperial Wealth Crypto can help. Inside our Crypto Academy, you'll get access to my personal portfolio, strategies, real-time market insights, and the exact plays my team and I use to stay ahead. With our team of analysts monitoring the markets 24/7, we've helped investors catch moves like a coin that's done a 5x in 4 days. If you're serious about accelerating your wealth, click the link below to book in a call with my team of experts and see how we can help. Now, back to the episode.
The reason why I believe prices will drive higher are because of the liquidity cycles and rate cuts that I mentioned before. But really, it's the regulatory clarity that we're seeing with the Genius Act. We're getting stablecoin bills passed. The biggest bill of them all that's kind of being pushed bullishly now, I think is going to be signed in the next month or so. I think that should be huge and has been a main driver of prices for some time. Obviously, a super important thing I believe to track is ETF flows and seeing whether that marginal buyer can absorb all the huge selling pressure that's been coming into the market. And the reason, I understand it's hard to be bearish, just particularly on altcoins right now, but the most fascinating statistic I find to believe why we haven't topped is that Bitcoin hasn't closed a single daily candle below 100,000 USD since May. This has been after the largest liquidation event in cryptocurrency history, in which estimates of up to 40 billion were wiped in one day. And really, we've got nation states pushing it. We've got all these different stuff that's happened that's kept it afloat. And really what I see at the moment, why I don't believe the top is in, it's like a silent IPO. That's what I like to call it. And other people that you would have seen online have called it as a silent IPO, where these whales are selling and it's just silently being transferred to that marginal buy of ETFs and institutions. So back in the day when it was a cycle top, we might have dropped from 69,000 to 40,000 in a week or two.
Yeah.
That's because that harsh selling isn't being absorbed by retail. They don't have the power to absorb that. But we've got a different market dynamic now that where the troughs are so muted and absorbed that this cycle we've had no 50% pullbacks. We haven't had, the worst have been between 20 to 30%, and it's because that marginal buyer is there to absorb all that buying pressure, because they see the staying power and the long-term power and are actually accumulating as these fundamental narratives haven't played out to a T just yet, because that's the smart money. But yeah, really to circle back, and sorry I've said a lot, is that I don't believe the cycle top is in because these fundamental narratives are still pushing it, and my technical analysis hasn't been invalidated.
Yeah, and it's you answered it perfectly, because the question I asked, the $1 million question, I ask it like that in a way, but really it's not what people should be focusing on, right?
No.
It's what everyone's asking out there on the internet, and everyone's so zoomed in on it. But as we've said so many times throughout this episode, it's not about what's happened in the past or what's happening in the future. You can only take things as they're coming, and no one knows the answer. So don't get sucked into the people like, it's going to crash down 100%. You don't know that. It is completely a different market now, as Mitch is saying.
Yeah.
We have institutions coming into it. Everything's different about it. We need to let it play out to actually assess what it is going to be. Thanks for tuning in to Crypto Coach Will. If you got value from today's episode, then make sure to subscribe so you never miss the latest tips to navigate the crypto market. If you're ready to take crypto investing to the next level, check out the links below where you can book in a call with my team of experts. We place strong emphasis on educating before investing in the market, so take advantage of the knowledge they have to share. Don't forget to follow us on socials @CryptoCoachWill, and I'll catch you in the next episode.